JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 5th of November 2020. So yep, welcome everyone. Welcome to this Thursday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts. Now the first one I want to pick up here is on Nikkei, and look at the beautiful move we had here on Nikkei. It popped above my barrier here, this 23,725 territory. I spoke about this and what I was saying, that if we get a nice push above it, then yes, higher levels could be met, and my next target here could be that 23,995 territory. But as you can see, it didn't stop there. It continued to rally, and it could pushed further towards that 24,105 zone, and this is where it ended the day. So basically a very nice run here for Nikkei. Looking at the picture here, the overall picture, we've managed to overcome the highest point of February. Now, don't get me wrong, we're still near the highest point of this year. That's where the holdup kind of occurred, and let me just zoom in here a little bit. There we go, and let me grab one of those. Let me actually recycle one of these lines here. Now, the highest point of 2020 here, and it's not this one, but sorry, not that December, and this is what I'm talking about here. There we go. So that's the highest point of the 2020, and that's roughly around, let me just, 24,115 actually. There we go. That's the level that I'm looking at for. So the 24,115, guys. So that's the oh wait, let me just grab this one, guys. It's not picking up here. So there we go. The high is 24,115, actually more closer to the 16. So the index did drift higher. It tested this area, almost tested this area fractionally here, and drifted back down. So basically this is quite an important one to watch right now, because if that gets broken, then of course a further move higher could be possible. We could start looking at some higher levels, even going towards these highs here, the highest point of 2018, which is roughly around, let me just grab this one as well, roughly around the 24,448 mark. So keep your eyes on this one, guys. Could be quite interesting, but at the moment, given that we've managed to reach already the highest point of 2020, almost managed to reach the highest point of 2020, maybe we could see a bit of a correction, maybe to the downside, maybe going back towards this 24,000 mark, and if that provides good support, then yep, a nice rebound here could be possible again. So again, everything's kind of looking quite positive here for Nikkei. So let's see how far this can actually travel, and if we can actually end up testing the highest point of 2018. 2018, and that's roughly around the 24,448. And let me just double check something as well. I believe no, that's not the all-time high, because the all-time high for Nikkei was back in 1990 level. So as you can see, 1990 was way up here, guys. So still, yep, that's quite a decent far kind of area to fill up, I would say. But at the moment, looking at this picture, looking at this monthly chart, you can see that the index is on track to potentially kind of testing the highest point of 2018. And last time this level was tested was back in here, back in 1991, guys. So yep, we can say that this has been the all-time high for the past, what, 30 years almost. So yep, yep, let's see how this is going to play out. But again, it's very interesting so far. The index is pushing higher, and like I said, let's keep an eye on the highest point of this year at 24,116. If that level gets broken, then the next target is the 24,448 mark, which is the highest point of 2018. Shanghai Composite. Now, looking at this picture, look at this beautiful move, and we've managed to overcome this 3,280 zone. I talked a lot about this one, and yep, it's moving nicely to the upside. So basically, yesterday in the beginning of this week, I was telling you guys to keep an eye on this barrier right here, this 3,280. Which if gets broken, then yes, it could in a way open the door towards higher levels, like for example the 3,326 mark or the 3,368 territory right here. This is my target for now. I'm gonna see how it's gonna perform around here, and then I'll take it from there. But for now, everything's looking quite interesting here for the Shanghai Composite Index. German DAX. Now look at this beauty here. I mean, this has had a nice, fantastic move to the upside. Yesterday, the index tested this area that I talked about, this 50% retracement on the Fibonacci. It also ended up near the 12,341 territory as well that I talked about. And what I was saying yesterday, that let's see if this area will continue to provide good resistance. Now, don't get me wrong, it could push a little bit further north here, and we could maybe test this this 200-day EMA, or we could even travel here towards this area first, this 61.8% retracement of the Fibonacci, tested and then reverse back down. But at the moment, I'm keeping an eye on this area, so let's see how this is going to play out. If it does continue to provide good resistance, then of course, yes, we could see a bit of a correction here back down, maybe even all the way towards this 38.2% retracement on the Fibonacci. The dollar index here, looking at this picture, you can see that so far it's a little bit an unclear situation here on DXY. Basically, the dollar index, or should I say traders, don't know what to do with the dollar index, and for now, basically for now, guys, we'll be very careful. We'll be very cautious here, because, well, I mean, in order to consider maybe slightly lower areas, what I would like to see here is maybe a drop again below this 93.12 zone, and then we could aim for the 92.47 level or even below that. But for the upside, I need to see at least a push back above the 93.90 zone. I know that we do have some good resistance up here, but if it at least travels back above this 93.90 level, then maybe I'll start looking at some higher levels again. So that's why, again, we are a bit of a bit stuck in limbo here. I mean, of course, most likely we're not going to find out anything from the US elections today as well. It's probably going to drag on for a while. So yep, bear with yourselves, with everyone here, and with the market, because again, the market might move up and down, guys, until it kind of figures out what it wants to do further. So again, for now, guys, yes, be very careful, be very cautious, but these are the two levels that I'm keeping an eye on for now. Gold, of course, gold. The slight weakness in the US dollar kind of gave a bit of a boost here for this yellow metal, and yep, we had a nice push here to the upside, but still struggling with this 1911 territory. So basically, the more it struggles with this level and the closer it remains to it, then basically the bigger the pop could happen. Of course, that's just an idea for now, guys. I mean, you'll be the judge for yourselves, but just like I said, something to keep in mind that the commodity here continues to test this area, this 1911 zone, and continues to struggle to stay above it. But eventually, if we get a nice boost here, maybe we could see a nice pop here and a push further north towards the 1933 level or even above that. So let's see how this is going to play out. But for now, that's the kind of the situation here. In terms of the downside, still the same idea remains. A drop below the 1860 territory right here is required in order to consider maybe a bit of a decline to the downside. So, well, actually, decline is already a move to the downside. So yeah, a bit of a decline. So WTI Oil, so very nice activity here. I mean, we had a nice push above this 38.31 zone. I talked a lot about this this level this week, and yep, we managed to make this we managed to move higher. Great, that's wonderful. Today we're seeing a bit of a corrective move here to the downside. However, this level continues to provide decent support. As you can see, previously was seen as a good resistance level, but now it's seen as a good support, and you can see that it did the same thing here back on the 26th of October. So let's see if it can continue doing that, if it can continue providing a good hold up here. If it can, then yep, a nice good push higher could be possible. If you're a little bit more on the cautious side, what you could do is keep your eyes on the current high of this week near the 39.23 level. A nice good pop above it may open the door towards some higher levels, guys. So be very careful, be very cautious, and let's see how all this is going to play out. But yeah, for now, it does continue to hold. This level does continue to hold, does continue to provide support. So let's see if it can do that still. But and if it can, then we might see a nice reversal back up. But like I said, if you're a little bit more on the cautious side, wait for a push above the 39.23 level, and then we could aim for some higher levels. Initially, not this level that I'm going to be aiming for, but what I'm going to be aiming here for will be this 200-day EMA shown as the black lines. Somewhere maybe around here it could be tested. So Litecoin. Now, Litecoin, I haven't looked at this one for quite a while, but look at this beautiful move here. So previously I said that in a way, if this area gets broken, then yep, we could see a further move lower to test this upside support line taken from the low of the 21st of September. Now, for now, it did test this area once again, and kind of this 51.36 zone, which previously acted as a fantastic area of resistance. It tested it and rebounded, and is now making its way higher again. So it's climbing back above the 54 mark. So that's wonderful news for the buyers. It's above all of its EMAs. However, to be a little bit more on the safe side, what I would prefer to see here is a push above this 56.80 zone right here, marked by the current highest point of this week. And if we do get a push above this, then yes, and maybe we could see some higher levels here again. So keep your eyes on that one, guys. Could be quite interesting. Now, jumping into a few pairs very quickly. So the ADCHF. Now, I haven't looked at this one for quite a while, but initially when this downside line did provide good resistance, the pair did drift lower, but didn't really end up moving all the way here towards the 0.64 territory. Now, basically for now, given that we had a strong reversal back up here, and we are now trading above all of the EMAs, although we're still below this downside line. Now this is where we'll become a little bit more cautious, especially with the downside scenario, because in a way it increases the chances for a possible pop higher. However, I would still prefer to see a push above the 0.6571 zone right here in order to get a little bit more excited with the upside, because at the moment it's a little bit tricky here. So that's why let's continue observing this this price action here. And if we do get a break of this downside line, yes, one part of the idea is kind of working out, but like I said, I would prefer to see a push above this barrier first. So let's keep an eye on that one. And in terms of the downside, I would like to see another drop here back below the 0.6493 territory in order to consider some lower areas. USDCHF. Now this is here. It's a slightly different story. I mean, here mainly the weakness of the dollar right now is kind of dictating here the direction, but nevertheless, it's still holding up above this hurdle, above this 0.1993 zone. I talked about this one, and basically what I was saying, that I need to see a nice good drop here, maybe even a daily candle staying below this area in order to consider some lower areas. At the moment, it's nowhere here, and I'm going to take a neutral stand. I'm going to continue observing the price action. In terms of the upside, I need to see a push above the 0.92 territory, somewhere around here, in order to aim for some higher levels. US dollar against the Turkish lira. Now, I kept talking about the euro TRY, but here, although the US dollar is maybe not the stronger one right now, but still look how weak the Turkish lira is, and you can see this move higher today. However, if I jump into a 4-hour chart, something for you guys to keep in mind, something to consider today. Basically, we have this nice downside resistance line taken from the high of the 3rd of November, and at the same time we have this little upside support line right here, taken from the low of the 4th of November. So basically, in other words, we have ourselves a potential triangle formation, which of course means that the price currently, the rate is currently coiling up. So there could be a nice explosion here to the upside, or a nice drop here to the downside. However, with this one here, I would still prefer to wait for a break of through one of my levels here. So one of the levels for the downside is this one, the 8.3720 zone. That's the current lowest point of November. A nice good drop below it, yep, may open the door towards lower areas. And in terms of the upside, I would prefer to see a push above this current highest point of, if I'm not mistaken, oh no, sorry, not the current highest point of November, but this is the high of the 4th of November. Now, the highest point of November is right here. Let me just put this one on the chart. There we go. The 8.5467 territory. Now, a nice good pop above it, of course, would confirm a forthcoming higher high, and more buyers could be joining in. But of course, be very careful for now, guys. I mean, like I said, it could go either way, but if we evaluate the overall trend, yes, the overall trend is still to the upside, but as you can see here, you can see that there is a bit of movement right now. So let's see how all this is going to play out. But at the moment, yeah, the same story here. I mean, it's going to be quite interesting to see if this pair could be able to reach that psychological 9 level. But of course, let's not rush into anything yet. Let's see how all this is going to play out. For now, we don't see any reversal signs yet, so that's why be very careful with that one. Now, GBP and NZD, of course, this morning we had already the BOE vote here on their interest rate. Of course, as expected, the interest rate remained the same at 0.10, so plus 0.10. And yep, no surprises there. However, GBP NZD is popping higher, and I can see that the BOE increased its quantitative easing to 875 billion from the previous 745 billion. So basically, that's a decent jump. And yep, the pound is taking a nice turn here, for a positive turn. But looking at this picture here, and by the way, let me just jump into a daily chart on this one. So here the situation is like this, that overall, yes, the pair is still trading below a downside resistance line taken from the high of the 16th of April. it recently, or should I say yesterday and today, it found good support near this 1.9347 mark, which, as you can see, continues to kind of do its job, provide good support. But if it eventually drops below this area, now this is where, yes, we could consider a bit of a move lower. And yep, we'll take it from there, guys. But at the moment, be very careful on this one, be very cautious. Now, don't get me wrong, I mean, it doesn't mean that from here we could start moving higher. I would prefer to wait maybe for at least a push back above this hurdle right here, the high of the 30th of October, near the 1.9622 mark, in order to consider a bit of a larger correction to the upside towards this downside line, and then we'll take it from there. In terms of this here, like I said, still there, it's leaning a little bit more to the downside, so let's see how all this is going to play out. But the moment it's rebounding from here, so let's see if the bulls have enough steam to drag this one a little bit higher. And Euro USD, this pair is pushing higher, but it's currently getting a hold up near this 21-day EMA. So of course, for now, what I've said this in the beginning of this week, basically what I was saying that in a way, if the pair travels back above this 1.1696 territory, then yes, and if it stays above it, then I'll continue targeting the upside. I will do that. Yes, I will stick to this idea, stick to this plan, because at the moment, I mean, it seems that it's showing willingness to travel higher. The only little obstacle for now at the moment is the 21-day EMA here, shown as the yellow line. So, but if that gets broken, then yep, the next target here could be that 1.1787, or we could go all the way towards this 1.1867 territory right here. Of course, don't get me wrong, I mean, we'll continue monitoring the situation in the US, I mean, and we'll continue monitoring the DXY, the dollar index, because again, it's a straightforward kind of impact. It has a straightforward impact, direct impact on this pair. So if dollar somehow strengthens suddenly strongly, and yep, we could see this pair shifting back down. But that's why I have my downside scenario from here, from this level, the 1.1612, and then yes, further declines could be possible. Okay, guys, I will have to wrap it up here. Thank you very much for watching and listening. I really appreciate your time, guys. I really appreciate your views and your likes. And so, yeah, I really do. I hope you find this useful. If you want to catch my video later on, my trader's tea time, as always, 14:15 GMT. I'll pick up on some of these instruments, some new ones, and then I'll take it from there. Yep. Let's see, like I said, let's see what the day has installed for us, but be very careful. Today we have some data coming out, of course, from the US. We have the initial jobless claims, continuing jobless claims. So yeah, keep your eyes on that one. But of course, the main event today is the FOMC statement and the Fed's interest rate decision. So keep your eyes on that as well. Like I said, be very careful, because the market might well move around a little bit more. So basically, volatility could be increased. So keep your eyes on that as well, guys. Like I said, check out the economic calendar. And yeah, well, like I said, let's catch up at 14:15 today at my trader's tea time, and then we'll take it from there. Thank you very much, and bye-bye.